In this video, we'll be reviewing the LuminaFX by Mr. Evgeny Sherbina. Stick around to the end to see if this is a real EA, worth your time, or just another MQL5 scam. This video is sponsored by Prosperity Algo and our free Golden Time Bomb Expert Advisor. Do you want to make 100+% annual returns through automating the London breakout and the opening range breakout? Then click the link in the description. So, this initially caught my attention as the bot is using a whole variety of different US dollar pairs to calculate the value of the American dollar index, or the DXY. I'm not 100% sure if he's using the pairs to get the exact index or if he's pulling the index information from the CFD broker. But in any case, he's using almost like a more unique strategy of multiple different data feeds to make a trading decision. And you don't often see this in the whole MetaTrader CFD space, where a lot of people just use purely price data from one pair to trade the exact same pair. So being able to use different data feeds, I thought was quite a unique concept in this industry. So I wanted to explore it in a bit more detail. And here the actual signal to enter, he's mentioning that he's using a recurrent neural network in order to kind of vacuum up that data and make trading decisions. This developer has built quite a few interesting bots over the years, so he might very well have that expertise to be able to do that. That being said, I do think that quite often there is a technical signal which goes along with any sort of model, so it might be helpful to understand a little bit more about what the technical analysis reasoning behind this bot is. So here we can go through it in a bit more detail, and he's discussing the different properties which it uses. He's giving us a little example here of the DXY indicator which you can use, which is aggregating all that data to help you make trading decisions. And supposedly this bot also runs in the daily time frame and makes trading decisions on the daily. One thing to note is we don't have a live signal, and this was published in June 2024. So that's a bit odd in my opinion. If something's been out for this long and it's been performing well, we should see a live signal. So if we're not seeing one, that would be something I would be a little bit apprehensive about, or perhaps I'm missing something and the developer might be able to send a live signal to us. So we can now open MetaTrader here, where I've taken the liberty of downloading the Expert Advisor and running a quick backtest. And really I wanted to see how this bot is actually making trading decisions. If we go through some of the inputs, we can see that you can cap max trades per signal. You're also able to turn off hedging and or netting. So for certain brokers, for instance, especially the American FIFO brokers, first in, first out, you are sometimes not allowed to open both long and short positions simultaneously. Hedging is not allowed. And with some accounts, in that case, netting would be essentially allowing trades in one direction. And here I believe you're able to toggle that on and off, which likely gives you a lot more flexibility regarding brokers. You're also able to adjust the trailing stop loss and take profits. And what this is showing is that there's likely some degree of trailing stop loss mechanism here. And we can even turn on the symbols and select which ones I believe it's going to be trading. And here as well, I had to add a suffix because I'm using 8cap, and .I just indicates that it's a raw pair with this particular broker. So you might have to do that depending on your broker. And I've run this back test here where it turned $10,000 into $33,000 over the span of a year. And clearly this is using some sort of grid mechanism or recovery mechanism, because we see a significant detachment in many places of the balance line from the equity line. The actual return is not astronomically crazy for this type of maybe higher risk, more martingale style bot. And what you can see here, if you look at the trades, clearly it's running a grid. And here we are running, yes, many grid trades. And but however, it is occasionally ending in loss for some too. So there's maybe a bit of a smart close element here too. It's not always opening a grid for every single pair. So 1, 2, 3, here it opened a grid, but here it just allowed losses to happen, which is kind of neat. So perhaps there's some sort of filter which toggles off if a grid is activated or not. Sometimes it just kind of closes them in a slight loss, which is a pretty interesting concept. There could be a max risk exposure setting where if you open too many positions and there's just too much potential drawdown in the account, it will then close all positions. But one thing I want to actually see now in a visual backtest is how many pairs it's trading simultaneously, because that can get really, really risky. Particularly with any sort of grid martingale system, the biggest risk factor is that you have a large or long run of trades. So with a grid, if you have 1, 2, 3, 4 trades in a row which are negative, and you have to keep opening more and more trades in a loss because you're scaling into a losing position so that your last trade ideally wins. If that happens and you have too many if that does not happen, you have too many trades that open, you're potentially exposing yourself to massive amounts of risk. So to be a bit more concise there, what I was trying to essentially get at is if you have a long run of losing trades and you have to open a multi-level grid where you're also scaling lot size, that can get extremely dangerous because in doing so, you can have an enormous amount of risk on the table. So the other big issue is if you're trading many, many pairs, the probability that you have a significantly longer run of trades gets far larger, right? Because let's say if you trade your USD, you might have one long run of trades once a year. But if you're trading USD CAD and your USD, if both of them have one long run per year, now you have 2 chances to blow your account. So this is an area where diversification is almost counterintuitive. People usually think, hey, more diversification is better. But in the case of any sort of grid martingale system, too much diversification can actually further increase your risk because your odds of having a blown account just get significantly higher. What's quite neat here is that it appears to actually have a smart close where sometimes instead of closing it in profit, it will actually just close it at break even. So it isn't just like a basic grid martingale. There is like a smart close element to it as well. Keep in mind, guys, that we're trading on the daily time frame here. So it could very well be trading actually not that frequently, but it looks very, very frequent. Let's look at the operations here. Yes, we're trading many different pairs, many of which are trading in a grid mechanism too. In terms of lot scaling, let's see if we can see if it's scaling lot size. It isn't really scaling aggressively, so it could just be opening more trades, but not with an aggressive lot scaling mechanism. So that's actually a good sign, because if it's not scaling too aggressively, your risk won't be quite as high. It appears to just be scaling as the balance gets higher. So it's like a percentage of balance-based risk management. Okay, so maybe just to summarize here, I can take a quick pause to see how it's actually entering trades. So in terms of entry signal, it does appear to be using more of a mean reverting premise behind it. I'm trying to see where his Dixie indicator is. It could be that, similar to what he was saying in the description, you might need to add that separately, but it appears to be using some sort of multi-pair mean reverting premise. It could be that if a certain pair deviates too far from where the US dollar should be, it can then kind of enter a mean reverting trade. That would actually be an exceptionally interesting way of trading, almost like a statistical arbitrage play. Whereas let's say that the Euro USD and the GBP USD are relatively correlated, but for some reason there's a significant deviation between them. Therefore, he's deciding to enter a mean reverting position, going long on one and short on the other, with the assumption that there should be some return to the average. He could be doing something like that, but from what I can see at least, which is just the most obvious, there is a mean reverting premise here. There's also some degree of grid, but it's not a true martingale as it's not scaling lot size too aggressively. At the same time, there is a smart close element where sometimes it will simply close in a minor loss or in effectively a break even. So the good is that there's a well thought out, quite interesting strategy here, and there does appear to be a real strategy behind it. It's not a scam. The bad or the cons is that there is some degree of grid going on here. So perhaps if it were to open too many positions, your risk could be quite high. So you would need to chat with the developer about that. And finally, there is no live signal. So it's really hard for us to ascertain how this thing actually works in practice. So guys, hope you enjoyed the video. Take care. Have yourselves a great day.